Good morning, everybody. It's Thursday, July 29th. Just going to run through the morning charts here. Here we've got the Kitco overlay gold chart. You can see yesterday was a relatively flat day. We saw the previous day low over here, and I mentioned that we would most likely see that low broken as it grinds lower. We saw some choppy action, and it did break that low, squeezed a few more long positions out, and since then it's been pretty much trading flat. This morning it's coming in a little bit higher, but the pattern looks similar. We're starting to get this sell-off, same as what we've seen the past 2 days, and we could see another squeeze actually lower below this low now, and that would trigger more stops and shake the market a little bit more, and hopefully we get a bit sharper of a drop and some volume, a bit more volume. I want to see a really good shakeout here. So if I pull up the daily and intraday chart of gold, here's the daily chart. It is falling down into a pretty key support level, which is what we want within this range here, and it's taking a little pause, drift up sideways here on with still some pretty good selling volume so far this morning. It's light volume, but let me pull up the intraday chart here. Here's a 60-minute. You can see it's forming another type of bear flag. This was the rollover yesterday. It broke this previous day's low, shook a few more people out. Volume wasn't huge, but there was still an increase in volume on that squeeze lower. And this morning we're seeing prices drift up a little bit higher, and forming hopefully another bear flag, and it'll squeeze down a little bit lower. So let me just pull up the US dollar here. Gold and US dollar have been acting a little funny. They keep flipping between moving opposites and in sync. This morning we've seen, in the past couple hours, we've seen gold drop and we've seen the US dollar drop, and they've been following suit more often than not, which is a little different. Anyways, I think the US dollar is getting very close to finding some pretty major support. You can see this great big consolidation period here, and currently the price of the US dollar is falling right down into this level. So there will be some pretty major support in this range, and that's where it's starting to enter today. And I think when it bounces, we might actually see stocks start to move down and take a pause, but I still think we might have a couple more days of it just drifting lower into this zone, and then I think we're going to see most likely a very sharp pop in the US dollar. It's just been stuck in this tight channel and getting pushed down and down and down. It is way oversold, and once we do get a pop, we're going to see it really take off. And it's tough to say if gold will move with it or not, so I don't want to say anything there, but that's kind of what I'm seeing for the US dollar. Now if we take a quick look at crude oil, you can see this is a daily chart zoomed way out, goes back a year and change, and you can see it's had the top, it's starting to round out, and then we had this breakdown on big volume down here, and what it's doing now is it's formed this great big bear flag, and it just slowly is drifting under this ledge of sellers, and it's starting to hang out pretty far. And I would expect that we see this is a continuation pattern. I would expect that we see a pretty good drop, probably down to the 60 area if it does break down, which will act as a support from this previous pivot low here. But overall it looks like it wants to go down. It is holding up against some pretty good resistance levels here, and it looked earlier this week like it was maybe going to break to the upside, but sellers stepped back in, and it got pushed right back down. So overall, the trend for oil right now, it looks like it's topping. It's starting to get choppy. It's getting slower and slower. We did have a big distribution month there, and now it's kind of fading up on light volume, and that's a sign that it's weakening. As for the SP 500, here's the daily chart of the SP 500. You can see we've got prices, they've been consolidating. It's a nice looking pattern here. It's sitting above the 5 period moving average and the 200 period moving average, and it's trading up under this resistance level. And volume's been light on these past couple days. You can see down here. The past 3 days have been light as it's traded sideways right at this resistance level, which is usually a consolidation. you could see it as a possible little bull flag, and usually marks a halfway point. We could see an extended rally up to here. I would first think we hit this 1130 if we get a move out to the upside, and then we'd probably go to around the 1150 area. But let me just zoom into the intraday chart. Here's 24-hour clock of SP 500 futures. You can see yesterday it closed right here, and through the night we've got this drift up on light volume, and the drift up is generally bearish, but you have to be careful trading futures. Futures can give mixed signals, but that being said, this is a low volume drift up. It's trading at resistance right through the noise here, and it's stuck there right now. If it could be a good, like a short-term play to actually take a short position, but if it breaks this 1110 mark, I have a feeling we're going to see the S&P easily test the 1115 and then test this previous high, and it could be on its way. I think we've got a nice consolidation, but when you zoom into the intraday chart right now in the price action, which is light volume on this drift up, right now it's bearish, this drift up. Although I do want to point out that we're seeing, if we zoom in on a shorter time frame, you'll actually notice these surges up are happening on fairly solid volume, and it's light volume sideways bars. And so even though this is a drift up, when you zoom in into a closer time frame, it's actually some pretty bullish price action. So I'm not looking to do anything right here, but that's for those of you who want to possibly get some action today. If it breaks around the 1110 area, it could be a great long entry. And of course, if it breaks this morning trend line, it could actually continue to drift lower as the market consolidates some more, and I do think we could see higher prices still to come. So that's what I'm seeing right there. As for the market internals, take a quick look at the put call ratio. It's hard to compare this to other price charts, but in short, these previous dips led to some nice moves up in the market, and this is a 60-minute chart. So this is this past rally. Every time it's pulled back down into these, it's pulled down from the into this region, we've seen the market move up, and it's trading back down here again. So this indicator here, while it hasn't been all that accurate for the past 6 months or so, it does help a little bit to know that it's down here, and people are getting still somewhat bullish on it, but it's not at an extreme level. I think we're going to see another pop in prices if things unfold that way. As for the NYSE advanced decline line, you can see I mentioned this in a previous chart. You get this wedging pattern, and then you see a breakdown, and then you see a test. And then this is when the market corrected last about a week and change ago. Anyways, we've had the same type of thing. It's been getting wedged up here. We've had this pullback, and this down here, when it pulled back to this level and we got this rally, this was a big pop that I've been pointing out, saying I think is going to happen. Everybody's shorting the market right now, but we're going to get one more pop, which is going to shake a lot of people, and it's going to get a lot of short covering, all those people to cover again, and that's what creates the pop. Once the momentum starts to move up and breaks the high, of course, you get a huge pop as everybody covers, and that's where I think we're trading right now. Is we're right back down here. The market's consolidated very, very nicely with price action, and I think we might see a squeeze up, and then once we break the highs, we're going to see a quick pop in this, and it'll go right back up, and then it could be a good opportunity to take a short position. So that's what I'm looking at right now. And so the NYSE advanced decline line in short is down near the lower reversal zone, which is a buy signal. We're somewhat oversold, so we're just going to let it play out a little bit more and see what happens here. So that's it for this morning, and I'll talk to you guys later. Bye bye.